Good morning, trading world. Welcome to the new year, 2023. This is my pre-market outlook and technical analysis for day trading the markets. It is 8:51 a.m. on the East Coast. And let's get to the outlook. Bring on the volatility. We came through 2022 in a volatile market and expect for the volatility to continue and even get more extreme. What this means for traders is if you're a long only trader, this will be a very, very rough year for you. However, if you are nimble as a trader and trade both sides, long and short, there will be some great opportunities for you as a trader. The cost of carry is going to affect everything this year, even how market makers trade. We have been in ZIRP monetary policy for what seems like a long time. And ZIRP is just zero interest rate policy. It's a method of stimulating growth while keeping interest rates close to zero. This will have an impact on everything this year, from the way local businesses factor, finance, and fund general business and inventories, to how market makers hold and carry positions. Before, with interest rates at pretty much zero, market makers didn't have to worry about holding positions and the cost of it. Now, with interest rates over 4% and rising, holding a position has to make sense. If a market maker has a position with an expected profit of $50K, but the cost of carry on the $1 million it takes to maintain that position is $50K, this is no longer a valid strategy. So market makers will be looking to unwind positions more to cut down on the cost of carry. So this will be one of the main reasons trade will be even more volatile this year. The outlook starting for the year is bearish, closing below the 382.43 with a possible retracement around 395.2, with dissonance between the technical side, which is bullish, and the quant side, which is bearish. Now, the monthly outlook for January is bearish as well, closing below 382.43 with a possible retracement of around 383.64, with dissonance between the technical side, which is bullish, and the quant side, which is bearish. Now, the weekly outlook differs. The weekly outlook is bullish, closing above the 382.43 with a possible retracement of 381, and harmony between the technical side, which is bullish, and the quant side, which is also bullish. Today, I am looking for retracements close to that 381, 380 level to add to my long bull put spreads and call positions that I took at the close of last year. Now, with that, let's get to the key levels to watch for today. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 386 to 387 area. Queen resistance is going to be 388 to the 389 area. And then king resistance is going to be 390 to the 393 area. It may take us a day or two, maybe another day or later on in the week before breaching these levels. up to the king and queen, well, mainly the king resistance level. On the support side, we have our jack support at 384 to the 383 area, queen support 382 to the 381 area, and then king support 380 to the 379 area. 381 is going to be a area or a big factor, at least for today, as holding support, not breaking that support to see anything major happen today. The main thesis for today is bearish, closing below the 382.43 with a projected target low of between 381 and 378. The alternate thesis is bullish, closing above the 382.43 with a projected target high of between 382 and 392. I want to reflect on, or let you know, to pay close attention to the alternate thesis, because often when we come in and the majority of the trade is facing one way, bearish, and we get that lean, which is quite possible today because we have new fund flows, so a lot of trade could kind of switch or turn to the bullish side. When that happens, and it happens suddenly, we get a more explosive alternate thesis. Hence why we are paying more attention to the alternate thesis today. The main channel we are in is from 379 up to 397. The main channel above that is 397 up to 416. Market strength and breadth spent the last trading day down in the dumps, but started to come off the mat at the end of the day. This leads me to believe we'll get a continued pickup in strength and breadth throughout the day, giving us a rally at some point today and throughout the week. With that being said, let's get to the scenarios of the day. All right, our first scenario is going to be our trend day up day structure, which means we open, gap up, and start with a fade back toward the previous close, represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day, which is the best time to trade, better known as our golden window. We usually find midday chop around either the possible queen or king resistance area. Not all the time, but a decent number of occurrences, we usually get a fade back into the close on our trend day type structures. So that is our first scenario, which has a 36% probability. And let's bring up the next scenario. All right, our second scenario, which is our last two scenarios are pretty much even probability at 32%. Our next scenario is going to be our expanded range day structure. And range day usually foretells us closing on both sides of the previous close. So we could have an initial drop at the opening and then go into a consolidation at some point before taking off back to the upside. That is our expanded range day structure, which still has a bullish bias to it. So that is the second scenario, and let's bring up the last. All right, and here we are with the last scenario, which is our rounded reversal day type structure. We could get a continued push. Excuse me for a moment. All right, getting back to it, the rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen support area. Find midday chop around either the Queen or King support before going back up with the same energy or force we went down with the first part of the day. That is our rounded reversal day type structure. However, I do want to be cognizant of the vice versa alert on the rounded reversal day type structure, which could look like this, where we get a continued push higher toward the Jack or Queen resistance level, finding our midday chop around either the possible Queen or King resistance area, and then going back down the second part of the day with the same amount of energy or force we went up with the first part of the day. So that is the rounded reversal vice versa alert for today. And as always, what is going to be very important this year, because of the volatility that we're going to have in the swings, it is of the utmost importance that you keep your risk in check so that you can stay in the game this year. I often or always close out the pre-market outlooks with letting you know your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position, and then managing that risk in accordance to our account size. So this will be of the utmost importance going through and going forward this year. Risk over direction. If you don't have that right in your trading, you won't last very long this year. I hope this helps, and as always, wishing you a positive trading day. Have a great one.